This is where the concept of jobber payments comes into play. It's not a single, universally defined term, but rather a way of understanding the payment processes specifically tailored to these on-demand service providers, the jobbers, who move from one task or job to another. Unlike businesses with regular payroll or consistent client contracts, jobbers often deal with a fluctuating income stream, numerous smaller payments, and the constant need to chase invoices. So what exactly are jobber payments? At its core, it refers to the various methods and systems employed to facilitate payments between customers and these independent service professionals. It encompasses everything from the initial invoicing and payment collection to the back-end processes that help jobbers manage their cash flow and financial records. Let's break down some of the key aspects of jobber payments. 1. Invoicing and quoting. The journey often begins with a quote or an invoice. For jobbers, these documents are crucial. They outline the scope of work, the agreed-upon price, and the payment terms. Traditionally, this might have involved paper invoices prone to getting lost or damaged. However, the digital age has brought about a wave of job management software and apps that allow for the creation and sending of professional-looking digital invoices directly to the customer's email or even via SMS. These digital tools often include features like customizable templates, automatic calculations, and the ability to track invoice status, whether it's been sent, viewed, or paid. 2. Payment methods. This is where things get interesting and increasingly diverse. Jobbers need to be flexible in how they accept payments to cater to a wider range of customers. Some common payment methods in the realm of jobber payments include cash. Still prevalent in some regions and for smaller jobs, cash offers immediate settlement but can be inconvenient for tracking and security. Checks. While declining in popularity in many areas, checks still remain a familiar payment method for some customers, though they introduce a delay in receiving funds and the risk of bouncing. Bank transfers. Direct transfers offer a secure and traceable method, but they require the customer to manually initiate the payment, which can sometimes lead to delays. Mobile money. In many emerging economies, mobile money platforms have become a dominant force in facilitating payments, offering convenience and accessibility, especially for those without traditional bank accounts. Card payments. Debit/credit accepting card payments can significantly broaden a jobber's customer base, but it typically requires investing in a point-of-sale, POS, terminal, or using mobile card readers and often involves transaction fees. Digital payment platforms. Services like PayPal, Stripe, and others offer a secure and convenient way for customers to pay online or through dedicated apps. These platforms often integrate with invoicing software, streamlining the payment process. 3. Payment collection and reminders. For any jobber, getting paid on time is crucial for their business sustainability. Efficient payment collection processes are therefore essential. This can involve clearly stating payment terms on invoices, sending timely reminders for outstanding payments, increasingly automated through digital tools, and having a system in place to follow up on overdue invoices professionally. 4. Financial management and tracking. Jobber payments aren't just about receiving money. It's also about managing it effectively. This includes tracking income, recording expenses, and potentially integrating payment data with accounting software for tax purposes and financial analysis. Digital payment platforms and job management software often provide features to help jobbers gain a clear overview of their financial health. 5. Security and trust. In the world of jobber payments, trust is paramount. Customers need to feel secure when making payments, especially through digital channels. Jobbers, in turn, need assurance that they will receive the agreed-upon payment for their services. Secure payment gateways, transparent pricing, and clear communication all contribute to building this trust. The evolution of jobber payments. The landscape of jobber payments is constantly evolving, driven by technological advancements and changing consumer preferences. We're seeing a significant shift away from traditional methods like cash and checks towards digital and mobile solutions. This evolution offers several benefits for both jobbers and their customers. Increased convenience. Digital payments offer greater convenience for both parties, eliminating the need for physical cash or manual bank transfers. Faster payments. Digital transactions often settle much faster than traditional methods, improving cash flow for jobbers. Improved efficiency. Integrated invoicing and payment systems automate many administrative tasks, freeing up jobbers to focus on their core services. Enhanced security. Secure payment gateways and digital platforms offer a higher level of security compared to carrying cash. Better record keeping. Digital payment systems automatically track transactions, simplifying financial management and reporting. Broader customer reach. Accepting a wider range of payment methods can attract more customers who prefer the convenience of digital options. Challenges and considerations. Despite the advancements, there are still challenges and considerations associated with jobber payments. Transaction fees. Some digital payment methods come with transaction fees, which can eat into a jobber's profit margin, especially for smaller jobs. Technology adoption. Not all jobbers, particularly those in more traditional sectors or with limited digital literacy, may be comfortable or equipped to adopt new payment technologies. Internet access and reliability. In regions with poor internet connectivity, relying solely on digital payment methods can be problematic. Customer resistance. Some customers may still prefer traditional payment methods, and jobbers need to balance offering modern options with accommodating these preferences. Integration complexity. Integrating different payment systems with existing business processes can sometimes be complex. The future of jobber payments. Looking ahead, we can expect to see further innovation in the realm of jobber payments. This might include increased adoption of contactless payments. Building on the trend accelerated by the pandemic, contactless payments via NFC or QR codes are likely to become even more prevalent. Seamless integration with job management platforms. We'll likely see more comprehensive platforms that integrate scheduling, invoicing, payments, and even customer communication into a single, user-friendly interface. Embedded finance solutions. Financial services like instant payouts or access to credit might become directly embedded within job management platforms. AI-powered financial management. Artificial intelligence could play a role in automating tasks like invoice generation, payment reminders, and even financial forecasting for jobbers. Blockchain-based payment solutions. While still in its early stages, blockchain technology could offer secure and transparent payment options in the future. With that said, thanks for watching, and until next time.